In 2014, the three legacy accounting bodies agreed to merge under the CPA designation. The merger required approvals from 40 accounting bodies, including national associations for CAs, CMAs and CGAs, and the regional bodies for each of the three groups in 10 provinces and 2 territories. It also required approval in Bermuda, where accountants were regulated under Canadian accounting standards. Of course, recently both Quebec and Ontario withdrew from the newly merged national body, but that's another story. Our point in this presentation is that, when Canadians think of accountants, they think of taxation. Take a look at the word cloud illustration used to introduce the article in 2014. Tax and taxation are clearly the most prominent words.
Part 2 of the Business Entities Workshop is focused on income tax issues. It discusses such issues as startup losses, issues around prospective investors, requirements for Canada's lucrative R&D tax credits, admitting non-resident shareholders, selling your business, and the taxation of capital gains on the sale of qualified small business corporation shares. This part of the workshop isn't meant to teach you to perform your own tax planning. Instead, we hope that you gain a better understanding of what is possible and how entities can be transformed to meet specific needs. Downloadable content includes detailed income tax legislation defining persons, individuals and corporations, partnerships and trusts. There are also some answers from Microsoft's Copilot AI service regarding the nature of joint ventures, limited partnerships, and LLPs, limited liability partnerships. Finally, there are examples of common rollovers meant to allow tax-free restructuring for moving assets used in an active business to either a partnership or a corporation. At the outset, it's important to understand that a business exists independently of the entity that surrounds it. The entity describes the owners of the business, but the business is itself an asset of the entity, or the persons that own it. The ownership structure can perhaps best be described as a suit of clothes worn by the person who owns it. As a business grows, the entity that contains it can, and probably should, grow and change. A business structure is not cast in stone. The owners of a business entity can choose to change it for many reasons. For example, the owner of a new business might expect losses in the first couple of years of operations. Sometimes a proprietorship or partnership structure makes the most sense, since they may allow owners to carry startup losses back and recover taxes paid in earlier years. Or an existing business may need to accommodate the needs of new partners or shareholders. In British Columbia, angel investors can earn a 30% refundable tax credit when investing in an eligible business corporation. Owners may need to restructure their business to qualify as an EBC. Another reason might concern the entity's ability to claim tax refunds for R&D. Corporations in Canada can earn lucrative R&D tax credits on the wages of employees engaged in eligible experimental development. This works best in a Canadian-controlled private corporation. Effectively, that means that Canadian residents must own at least 50% of voting shares. Or a retiring owner may wish to sell his or her business to a third party and gain access to the lifetime capital gains deduction for a qualified small business corporation.
As we said earlier, in business, as in life, context is important. Going over the theoretical advantages and disadvantages of different structures is pretty much pointless, since most of us live in the real world and not some theoretical one. In my world, learning isn't a spectator sport. I find I learn much better by doing, so at the hatchery, we take a different approach to our workshops. First, take a look at the compiled PowerPoint presentations in YouTube format. Then sign up for your free membership and arrange for a personalized workshop, one-on-one, for between 30 minutes and an hour. Fees for each workshop are $100 plus GST. In return, we'll give you access to downloadable content for the particular workshop. But before we meet, I need to give you a little homework. You'll have to tell us a little bit about yourself and your company and what you're trying to get out of the workshop. Before we meet, I'll do a little tax research if necessary about your particular situation. The cost of each workshop can be applied against any future tax or accounting work performed for you by members of the Hatchery or SBA Canada.